Can you imagine a Perp DEX flipping Tether's revenue in just 24 hours, teasing massive buybacks, and getting a nod from CZ himself? All while its token consolidates for a potential breakout? That's Aster right now, leading the pack with $228 billion weekly volume and $93 million in fees. But here's the real edge. You can farm its airdrop with zero directional risk using funding rate arbitrage. Stick around. I'll break down the news, chart the path to $4 targets, and show you exactly how to stack points without getting wrecked. If you're new to Perps, don't sweat it. I'll keep it simple. This could be your ticket to free tokens in a project that's already outpacing Hyperliquid. Let's dive in. Aster just flipped Tether in 24-hour revenue, hitting $29 million, while Tether's at $22 million. And check the table. Over 7 days, Aster's $93 million fees smoke Hyperliquid's $26 million. Annualized, Aster's market cap to revenue multiple is 0.65x versus Hyperliquid's 11.9x, way undervalued. Aster's eyeing 15% buyback yield annually from fees alone, crushing Hyperliquid's 8.4%. CZ nails it. Lower fees mean higher volume, and Aster's per trade costs are cheaper for users. Fast forward to this thread. CZ straight up says he's advising Aster, not on the team, but close enough to spark FOMO. Bolivian chimes in. No reason to sell my 300,000 Aster. Buybacks coming. Leads Perp volume. MEXC drops the mic. CZ advising. Not even on Binance yet. Staying under $2? Coded. CZ doesn't want Aster competing with Hype. They compete with Binance. Smart pivot. Data as of today. $1.5 billion operating income. $228 billion 7 days volume, $93 million fees. Hyperliquid trails at $12.9 billion operating income, but just $18 million fees, thinner margins. Lighter? $1.3 billion OI, but zero taker fees help. Aster's crushing on pure efficiency. And this Aster post? Epoch 3 smashed $142 billion perp volume. 133,000 traders, and 580 billion RH points distributed. Top traders snagged 0.9% allocation. They're incentivizing smart trades, 4% of total supply up for grabs in Stage 2. AZ Flynn's TLDR hits home. 4% of Aster supply to be awarded by October 5th, ending Stage 2. But how to boost RH points? Trading volume, holding time, using Aster assets like ASBNB and USDF for margin and PNL. Makers get 2x points over takers. Swap USDT 1-to-1 for USDF to boost. With 10x holding score boost, it's rewarding patience. Aster's update. Stage 3 adds spot trades, refreshed incentives. Farm smarter, delta neutral on majors across exchanges. Alright, let's zoom into this 12-hour chart. I've anchored Fibonacci retracement from the prior top at $2 down to lows, and boom. Rejection dead on at the 1618 extension. Classic Fib magic, keeping it real. Price pumped post-launch, hit that high, then traced a descending trend line, dashed orange here, establishing resistance. Now price is consolidating just a bit above it, retesting for the second time. If it cracks up on closing, we're golden. That's your breakout signal. Price is battling the 10 EMA at 190-ish, but holding above bullish sign. 21 EMA lurks below for support. For newbies, EMAs are like moving averages smoothing price action. Crossing above screams momentum. Green box? That's my DCA zone, $160 to $2. I'm loading up gradually. I'm in at 170 average. Not perfect, but I've got bullets for dips to 130 if needed. VRVP on the left shows point of control at $1.95, now resistance. Heikin-Ashi RSI indicator is neutral but ticking up. Consolidation is maybe ending. A weekly candle closed below $1.55, the red line. That's my short-term invalidation, tighten stops. But long-term? I'm holding half of the bag. Fundamentals scream upside. My targets, Green circles at $2.45, prior high, $3.20, next fib extension, and $4, my moonshot up to November 10th. Trail stops. Hit TP1, move stop loss to entry, and so on. Risk-free from there. Volatility is low now, but watch liquidation on perps. My honest take. There's a pullback risk to $1.55, but buyback fuel plus volume lead? This retraces to rocket in my opinion. Time to stack that airdrop. Zero fluff, just the play. I'm using the funding rate's current data combined with a delta neutral strategy. But what the heck is that? That's periodic payments on perpetuals keeping futures tied to spot. Crowded longs? Positive. Longs pay shorts. And if shorts dominate? Negative. Shorts pay longs. So the differences across exchanges? Goldmine for arbitrage. First enter Loris tools. Top pairs sorted by max arbitrage. For this example, I'm filtering Aster and MEXC. Both exchange links pinned in the comments section below. Oh, and my referral give 1.5x team boost on Aster. Moving on, SQD leads at around 42 BPS. So what to do? Long SQD on Aster and short on MEXC. Same leverage and price, or the most similar you can get. Open positions and monitor, no high leverage. Add collateral if price is close to liquidation. Hold for 10 plus minutes. Hours is better for more points. Volume is king, but duration counts. When BPS dip below 3 for 3 to 4 hours, close both positions and flip to the next pair. My tips: altcoins over Bitcoin and Ethereum for 2 to 3x points. That's a delta neutral strategy, so no bias needed. You profit rates and cover fees plus slippage. Risks? Volume spikes and liquidation. So I'm checking at least 3 times daily, low leverage, skipping meme coins, and always adding stop loss and a take profit zone. This farms Aster points like a boss while netting yields. In my opinion, Aster is not hype. Its revenue dominance in CZ is super smart. The airdrop mechanics are built for real traders. From flipping fees to that chart coiling for $4, it's a yield beast. So, you've got the tools, go farm and stay safe. If this lit a fire on you, destroy that like button, subscribe for more daily yield breakdowns, and upgrade to members for exclusive videos. Catch my Plasma deep dive next, link on screen. What would you like to see here? Drop below. Thanks for riding. Never financial advice. See you tomorrow.